Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Monday. In today's program, I want to discuss the recent announcement by the Bank of England to try and calm the markets, plus maybe in a possible dream, and at the same time, how the US dollar continues to beat up all its competition. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So basically, end of this week, the Bank of England is ending its emergency bond buying program. However, to calm down the markets, knowing that the date is getting very, very close, they've announced they are going to double up on its purchases. Instead of spending only 5 billion per day, which they haven't spent 5 billion per day, that was the cap. They were going to say at least 5 billion or maximum 5 billion. They've increased it to 10 billion a day. The idea of this was obviously to give the bond market a little bit of calm and the gilt market a bit of calm before they pulled, obviously, the band-aid off on Friday. Friday was the time they were supposed to end their bond buying program. We might, rumor has it, we might see an extension to their bond buying program, depending on how the market reacts over the next couple of days. But for now, this announcement has sort of calmed the nerves of the market. But there's something else which might scare the market even more. It certainly scares me. And that is something happening on the 31st of October. Yes, I know that's Halloween, but that's not what scares me. What scares me is the UK government has moved forward their announcement of their fiscal statement to the 31st of October. Originally, it was going to be released on the 23rd of November, but there was a big concern about this because that is after the next Bank of England interest rate decision is supposed to be announced. So they've moved it forward to the 31st, again, to try and calm the markets. But here's the thing. This statement is expected to show how the UK government intends to pay for the 40 billion pounds sterling, 43 billion pounds in tax cuts and cut UK debt. It's going to be a magical statement, this. It must be, to be able to do all that. So I think that's going to be a pretty scary, because I think there's going to be so many people are going to be able to pick holes in this plan, which would or could scare the market again, like it did on the day they initially announced their mini budget. So that's something to keep an eye on. So that's the 31st of October, a very scary Halloween indeed for all you sterling traders out there. Now, something else, moving on to other news, an impossible dream. Chicago Fed President Charles Evans, he spoke today and he said, I think, I'll quote him, I think we can bring inflation down relatively quickly while also avoiding a recession. Now, don't forget, one of the many things the market is scared of is that because the Fed has been really aggressive with their interest rates, it's going to push the US economy and the globe into a recession. But he seems to think that they can avoid it, which I'm not sure they can. But anyway, he goes on to say, unusual behavior, I mean, he's talking about the quite strong labor market, even though they've been raising interest rates, will allow the Fed to disinflate without a large increase in unemployment if we can navigate the path to a reasonably restrictive policy setting carefully. So I still think it's a little bit of pie in the sky, to be fair, because raising interest rates is going to put a lot of strain on businesses as well as the consumer. So businesses are already struggling with obviously high inflation, inventory issues, and supply issues as well, energy supply issues. So this, it's a little bit, it is a wishful thinking, I think, in his half. But anyway, moving on to the markets at the moment, as we see it, US dollar continues to break all our stuff. Yes, in other words, the dollar is actually really, really dominant still at the market. But there's one pair in particular, which we'll start off with. We'll have a look at first, because I'm going to bring the market up in a minute. It's the dollar yen. It's the dollar yen, because we are approaching that area last time Bank of Japan intervened. But anyway, let's pull up the BOJ. Not BOJ, sorry, the dollar yen, and have a look at it. So as you can see, currently at the moment, we are approaching we are approaching that key area. This is on a daily chart. Don't forget, this is the candle where obviously they intervened last time there. So we are approaching that level. We're currently trading at 145.61, round the parameters of when the Bank of Japan intervened last time. So all your dollar yen traders, be very cautious, because you might start seeing sharp moves again. As we know, that's the level last time they intervened. Well, they're going to intervene again in the FX market. So keep a very close eye on that level on the next coming days. Euro dollar under 97 handle, currently trading at 0.96, around 0.97, under that key area of resistance, which is 0.99951. So yeah, pure dollar strength. This is on a daily, of course. If you look on the 30-minute, you can see that obviously we're a little bit sideways on a short term, but on the day, again, we're looking set for another fourth day of losses, so fourth day of gains for the greenback. Sterling, pretty much the same story as well. Way under that key level, 1.112, currently trading at 1.110. Like I say, the next real key area, or the barrier I'm going to be watching out for, is, which I think in the medium to long term, the sterling will get to against the greenback, will be 1.08. So I'm keeping a very close eye on that. So again, also set for a fourth day of gains against the sterling, the dollar, that is. S&P 500. Okay, 3,627 points, slightly down for the day. But like I say, is expected to have also a fourth day of losses against the US dollar and the market. Gold, okay, gold coming very close now to that key area of $1,667, currently trading at $1,674. So like I say, keep a very close eye on that. What I see is a key potential support, potentially at $1,667. So yeah, that's how the market, the dollar is still king at the moment. It's still dominating everything. We still have a lot of risk aversion. Again, this is all fueled. Sorry, throat's a bit dry. This is all mainly fueled, of course, by the fact that we had a pretty reasonable, not amazing, but reasonable job data on Friday, which is really making the market convinced that yes, we're going to get a 75 basic point rate hike come November. So anyway, other things happening this week. We've got UK claimant count, UK unemployment, UK GDP, the FOMC minutes, which will be fascinating. That will give us more clues. But the big one is US CPI on Thursday. I will be doing a watch along for that event, because that potentially could be a real big market mover. So please come and join me for that. Don't forget, as well as that, on Friday, we have the beginning of the earnings report for the biggest US banks, JP Morgan, Wells Fargo, Morgan Stanley, Citigroup. They've already given us warnings that things aren't looking pretty. So what will these earning reports really show us, and how will the market react? So don't bear in mind that's coming up very, very soon too. The markets, as they currently stand, as we've already had a look at, let's look at the European markets. FTSE currently trading in the red, negative 0.02%. DAX currently slightly in the green, 0.59%. US 50 currently also in the green, 0.12%. So yeah, like I say, at the moment, not a lot to report apart from the Bank of England today. The UK government, I think that's going to be a pretty scary event. I mean, bear in mind how they moved the market with just their announcement of their mini budget. How they're going to prove it, and I'm pretty sure people are going to pick holes in it. So I think it's going to be a pretty scary day for the sterling as well. But at least they've moved it forward before the Bank of England, so the Bank of England can then decide what to do based on the reaction of this fiscal statement. So that's one positive thing as well. But anyway, don't forget, you can ask me questions anytime you wish, or simply say hello if you like, or tell me your opinion on what you think is happening in the market. I mean, like I say, when the dollar yen, will the BOJ intervene again? I think it's getting close to that area there. They showed us last time how far they're willing to let the yen fall to against the greenback before they intervene. So maybe, just maybe, this could be, a next day or so, next couple of trading days, could be extremely interesting if you're a dollar yen trader indeed. Don't forget, if you think of a question later, you can put it in the comment section on YouTube or Facebook. I will see them and I will reply to them next time I go live on air, which of course will be tomorrow at 8:30 a.m. UTC, and of course again tomorrow in the evening session at 2 p.m. UTC. So please come and join me for that. If there is no questions, not a problem, not a problem. If you're watching me on Facebook, by all means give us a follow. If you're watching me on YouTube and you enjoyed this little video, by all means subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video, found it useful and interesting, and you put up with me, my over the top enthusiasm for the markets, which I can't help because I love the markets, and simply giving one of those, it's nice to know that you like what I do. Anyway, till next time, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.